Hi, good morning, and welcome to another edition of Market Analysis. I'm Giovanni Benacourt, analyst, trader, and operator with Vantage Markets. Well, the Fed faces reckoning with companies and markets. Why are they so out of sync? Well, the Federal Reserve and markets seem to be looking at two different economies. A raft of Fed speakers this week talked about the need to get the key interest rate up to 5%, about three-quarters of a point higher than where it is now. Some, such as James Bullard, want to get there faster with a half-point jump. Others, including Patrick Harker and Lori Logan, prefer to take it slower with quarter-point increases. Susan Collins, Lyle Brainerd, and John Williams speak today, and then Christopher Waller adds his voice tomorrow. All are getting their view out before the next decision on Fed first, on February 1st. To justify their continued determination to push rates higher, officials point to the unemployment rate, which is still historically low. Jobless claims data came in better than expected at 190,000 new claims versus 250,000 expected. In addition, the Fed can cite services inflation, which isn't slowing nearly as quickly as goods prices. That makes sense. In as far as you need slack in the labor market to prevent last year's inflation spike from feeding into wages, and services make up about three-quarters of the economy. So those price changes can carry more weight, but both are lagging indicators. It takes a while for changes in the real economy to show up in them. On the other hand, retail sales are weak, companies are making layoffs, and inflation is clearly slowing. For clues as to the current plight of consumers, just look at today's earnings, such as Procter& Gamble, which owns some of the biggest consumer brands from Pampers to Pantene. The yield on the 10-year Treasury is considerably below the yield of the 2-year note. In fact, it's not far off the deepest inversion since 1991, seen late last year, as signal that's usually interpreted to portend recession, which really, technically speaking, we're already in a recession. Okay, so with that being said, stocks are tumbling as traders digest the latest hawkish Fed comments in the face of the weaker data. But don't worry, the Fed will catch up with markets soon, but probably not before rates get to 5%. So with that being said, let's take a look at the markets. All right, so yesterday we saw the market, we were talking about the markets, and I said I placed my resistance at 11,800. We were shy of it, just about 39 points to be exact, but it was close enough. All right, from there, I did say that if we do come towards that resistance, we'll find that resistance, right? So meaning sellers, and that's what we found. A lot of sellers, and that brought the market lower. Now the market is trading, is bouncing off of the 21 moving day average that I have here. So that could be used as a dynamic support. Will the market continue to bounce off of it and then just take another attempt at taking out that previous high from yesterday? That is one scenario. Another scenario could be that since things are so out of sync and good news are bad news for the market, which meaning that jobless claims is good news, 190,000 jobless claims, less than expected. So meaning that more people are working, but it's bad for the Fed because the Fed wants more unemployment. So there's the scenario. That's why good news is bad news. So we could probably continue to see a continuation on the slide of the markets. The downside, obviously, is coming down, perhaps down to my support of 11,200. That will be yet to be seen. RSI is still not below 50, which is usually one of the indicators inside the RSI that the momentum to the downside is creating, it's building up. So once the RSI reaches 50 and towards 40, then we can say, okay, now the momentum to the downside is stronger. So that's one way also to interpret the RSI. Here we have the S&P 500, which is looking to bounce off the 21-day moving average. The RSI is kind of usually basically also flat, just like the RSI. So the The 4,000 level that we were speaking about that it was holding, it held until it didn't. So now it has been turned into a resistance, and my support is at 38.80 around it. So would that continue to happen? To see if today will meet, and the market will continue to drop and then come down towards this particular level of support. Now 3800 obviously is that psychological support. Will that be revisited today? Well, that will make it right about 144 points for the S&P to drop. So there's that scenario. The Dow also is pushing lower. 35,000 is now my resistance. I have 32,800 ish. I want to make it 200. Oh boy, 32,800. So let's make it 32,800 right there. There you go. Okay, so that's my support. That's where I see perhaps the market coming down towards. So RSI is already trading below 50. Okay, so you see it pointing towards 40. So that momentum is strong in the Dow. Will that continue? Well, we'll see in a few minutes. Then we have the Russell 2000, which is also trading lower. The 21 moving average is trading above right my support level. So I have 1820 as my support. So if things continue to move lower, that will be the case. Crude oil, yesterday I put 82.50 as my support and my resistance. It almost kissed it. It was just right about 15 cents from reaching it. That's close enough for me. So we found that resistance. Sellers coming in, brought the market back down towards my support of $78. And that's where we are now, trading above that. At $80 right now will be that psychological resistance level for crude oil. Let's see if that happens. And if the dollar index continues to slide, which it did a recoup yesterday, then we could probably see that. Nat Gas, the same token, Nat Gas trading below 350, which last week was held pretty well. Now it can be turned into a psychological resistance level. $3 is my support, my psychological support level. RSI is really trading narrowly inside, being oversold. So they got to keep that in mind as well. Gold, this level of gold, this way that gold is used, is trading, we can actually take this low, take this high, and take this low to project our probable path of price to the upside, or the extension of it, if we use our Fibonacci tool, our Fibonacci extension tool. So we say that if the extension is going to continue, we obviously want to come up to 0.38. We want to come up obviously to a Fibonacci golden ratio of 0.618, but the most likely level is around 50. So if that's the case, we could most likely come and revisit, first of all, that 1920, okay, which I used, that was being respected last week pretty well. Also on Tuesday, it was respected. So, but it was violated by yesterday's movement. So let's see if that could be the case today. Goal for it to come back up to 1930, which is right about where the 50 marker will be. Above is the golden ratio. So that could be one particular scenario for gold to move up to those levels. Okay. Otherwise, if that's not the case, at 1900, obviously that's the psychological support level. I have 1880 as my support. Then we have silver. Silver is really looking to hold above 23. The RSI, the 21-day moving average, is above our market right now, so it's acting as a dynamic resistance. I have 24 as my psychological resistance. Then we have copper. Copper, you said it did a good momentum to the upside, but quickly it was retraced and the market actually closed where it opened. Okay, so this particular doji can represent a change of trend or change of market sentiment, and that's what we've seen so far. Some pretty nice sell-off. But you see, this is a cluster of a volume cluster. This is a ranging consolidation stage. So it's a lot of interest right now so far to maintain the price of copper above $4.10. I have my support at $4.15. But I think I'm gonna keep it there. Okay, I'm gonna keep it there. RSI is looking to come back into normal territory right now. It's still right at the border of being overbought. And then we have, the currencies. Euro is looking to stay above 108, and that should be the case. It should continue to do so, or just enter into a consolidation stage and just trade around that 108. The pound, the same token, is looking to stay above 123. I'm looking at pounds to stay, do a ranging right around 123. Mr. Dollar index is looking to stay above 102. Okay, if we see that the market actually continue to trade lower, come down to 105, would it actually come down to 101? That's the whole scenario, and that's what we're waiting to see if that will happen, or will it just stay also inside this range of below 102,400 and above 102,600, 101,600. Sorry. Okay, that could be the case. Well, that's it for me today. Again, I want to remind you that next month, in starting February, I'm going to be doing some live streaming, talking about the markets, talking about different things. So keep posted, keep on the dial, right? Keep watching and be ready. Have some great opportunities. All right. Well, I'm Giovanni with Vantage Markets. I'll see you tomorrow.